Ladies and gentlemen, good day and welcome to Rathi Steel and Power Limited Q3 and 9-month FY26 results conference call hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Parth Acharya from Kirin Advisors Private Limited. Thank you, and over to you, sir.
Thank you. Good evening, everyone. On behalf of Kirin Advisors Private Limited, I welcome you all to the conference call of Rathi Steel and Power Limited. From the management team, we have Mr. Rajesh Jain, President, Mr. Kushal Agrawal, AVP of Growth and Strategy of the company. With that, now hand over the call to Mr. Rajesh Jain for the opening remarks. Over to you, sir. Thank you.
Thank you. Good evening, ladies and gentlemen, and a very warm welcome to all the investors, analysts, and stakeholders joining us today for the Q3 and 9 months FY26 earning call of Rathi Steel and Power Limited. We sincerely appreciate your continued confidence and engagement with the company. Rathi Steel and Power Limited represents a legacy of over 5 decades, anchored in credibility, metallurgical excellence, and an unwavering commitment to the quality. The Rathi name has been synonymous with structural strength since 1940, and today we advance that heritage through a modern, technology-driven and sustainability-focused manufacturing approach. Our approximately 12.5 acres integrated facility in Ghaziabad operates with a steel melting capacity of around 85,000 tons per annum and a rolling capacity of 2 lakh tons per annum, enabling scale efficiencies, operational resilience, and disciplined cost optimization. A key technological differentiator is our direct billet charging technology in stainless steel wire rod manufacturing, which enhances energy efficiency, reduces handling losses, and strengthens cost competitiveness. Our diversified portfolio includes stainless steel billets, wire rods, bright bars, and TMT bars, reinforcing our credibility into infrastructure and high-specification construction projects. Green steel remains central to our strategic orientation. Our recycling-based circular steel-making model significantly lowers carbon intensity compared to the conventional primary routes, aligning with India's decarbonization priorities and rising ESG-driven procurement standards. Growing demand of FE550 and FE550D grades TMT bars from leading real estate and infrastructure players across NCR represents a compelling opportunity for the premium sustainably manufactured steel. Coming to our financial performance, Q3 FY26 reflects strong operational execution. Total income stood at rupees 160.09 crores, up around 51% year-on-year basis. EBITDA was 6.41 crores, registering a 38% growth, while PAT rose to 1.91 crores, up 262%. For 9 months FY26, total income reached to 472 crores, reflecting 32.67% growth over the corresponding period last year. EBITDA stood at 19 crores, up 16.96%, with PAT at 5.42 crores. Improved capacity utilization, cost efficiencies, and a balanced product mix supported this performance. We all commenced Q4 with our highest ever monthly sales of approximately 77.45 crores from the Ghaziabad facility. The broader industry environment remains supportive. The Union Budget 2026 has allocated 12.2 lakhs crore towards capital expenditure, strengthening demand across railways, infrastructure, energy, and urban development. Under the Specialty Steel PLI scheme, 85 MOUs worth rupees 11.887 crores have been signed, with incentives ranging from 4 to 15% for high carbon steel production. Additionally, 20,000 crores have been earmarked for carbon capture and green steel transition, reinforcing the policy push towards sustainable metallurgy. On the trade front, India-EU FTA is moving tariff on most iron and steel products towards zero, with over 70% of the tariff lines seeing immediate duty elimination. Similarly, under the recalibrated India-US trade framework, reciprocal tariffs have been reduced from around 50% to 18% across a broad industrial basket. These measures enhance the competitiveness of engineering goods, machinery, and automotive exports, which in turn is expected to stimulate incremental domestic demand for high-grade and stainless steel products across the value chain. Rathi Steel and Power Limited stands at the intersection of legacy, technological capability, and environmental responsibility. With a strengthened stainless steel portfolio and a firm commitment to energy efficient and green steel production, the company is structurally aligned with India's infrastructure expansion and sustainable industrial growth. Thank you once again for your continued support. I now open the floor for questions. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Hridaynath Kolani from Kubir Advisors. Please go ahead.
Yes. Thank you, sir, for the opportunity. So, I'll start with the financial part. So, revenue growth has been strong in Q3. And
Sorry to interrupt, Mr. Kolani. Can you please speak a little louder?
am I audible now?
Yes, please go ahead.
Yes.
I could see the revenue growth has been strong in Q3 and 9 months. So, I just wanted to know the detailed product-wise revenue and volume breakup for stainless wires, rods, billets, stainless rebars, and carbon rebars, and if it would also help if you could explain this mix has evolved over the last 4 quarters.
Good afternoon, sir. We will send you the details, which is not, I mean, the bifurcation is not with us right now. And we will definitely send you the details of bifurcation in terms of carbon steel as well as stainless steel.
Okay. And also on the balance sheet side, so I just wanted to know the current gross debt and working capital borrowings as of Q3 FY26. And what is the blended borrowing cost today as compared to 2 years ago?
2 years ago, we were with in the debt restructuring mode. So that time the cost was much higher. Now, as on date, the gross debt with me is 43.50 crores. Right, and the cost of debt is going down, and we are making all efforts to go down further. As compared to the restructured ROI at the time of restructuring, it is much lower as on date. Which you must have seen from the results also. If you see that debt cost as on March 24 and the debt cost debt amount or interest cost as on date, it is much lower.
I can see, yes.
So till 2024, the debt cost was high. Now the debt cost has gone down. We are making all efforts to make it down further. We are approaching other lenders at a lower rate of interest.
So, I could see historically your EBITDA margin has been in the range of 4 to 5%, but where do you see these margins closing for this financial year FY26? And what is the realistic sustainable band for even FY27 and FY28, assuming better realization and higher stainless mix?
Can you come again?
I'm saying your EBITDA margin has been in the range of 4 to 5%, but where do you see this margin closing for 26 closing in F27 and 28, assuming we expect a better utilization and higher stainless mix?
If there will be better utilization and the market is conducive, then it will definitely go up. Because we are making various changes in our existing plant, by which we are trying to reduce our direct cost. So it will be much subject to market conditions. It will be higher.
Got it.
And with the higher capacity utilization, the margins will definitely be higher. Because there is always a fixed cost element, which never increases with the volume. But
I could see like YOY, your other expenses has increased from 17 crores to 23 crores. Can you explain this increase?
yeah, if you track our company, in December 2024, we were not operating the TMT mill, right? But in December 2025, we have restarted the TMT mill operations in April 2025. When we restart the mill, there is always a power cost, there is always a consumable cost, which was not there in 2024.
Okay.
So that's the reason, in absolute terms, it is higher as compared to 2024.
And in terms of scrap sourcing, how diversified is your domestic procurement network? And are you seeing any tightening in availability or spread in recent months?
You can get it. Can you speak a little louder?
Yeah, I'm saying in terms of scrap sourcing, how diversified is your domestic procurement network?
We have not seen any problem in sourcing the scrap because it's readily available in the nearby areas. So, my plant is never closed because of the non-availability of scrap.
Okay, got it.
So that is not a big problem at all. That is not at all a problem for me.
Got it. Okay. Just one last question from my side. So on the demand part, where are we seeing currently strong traction from, and which is real estate, infrastructure, railways, or commercial? Has this mix shifted meaningfully in the last 2 to 3 quarters?
We are mainly focusing on the real estate players, bigger projects. All the developers in the NCR, we are approaching all the big developers in the NCR for our TMT product. Of course, my stainless steel wire rod is B2B business, and we sold the SS wire rod to the various business houses. But for TMT, we have approached all the private builders and developers, which are in big names. You can also see those in our presentation, all the big names. We have supplied our TMT rivas to all the big names, including Wave City and some others. So our first aim is to cater all the developers. Thereafter, yes, definitely we will approach to railway and other.
Got it.
Apart from this, yes, we have a very wide network of dealer distribution channel, and we are also selling our products through distributors.
Got it. Thank you. That's all from me.
Thank you. Before we take the next question, a reminder to all the participants, if you wish to ask a question, please press star and 1. The next question is from the line of Aditi Jain from Wealth Management Consultants. Please go ahead.
Hello. So my question is, as we move towards the targeted 75 to 80% melting utilization, what kind of EBITDA margin expansion should we expect purely from operating leverage?
Hello. Yeah, Aditi, good afternoon. Good evening. Once we will move to 75 to 80% capacity utilization, EBITDA margin will definitely much higher, subject to market conditions. We expect to grow at a CAGR of 20% on a yearly basis.
Okay. And from an operational standpoint, how many days in the quarter does the plant typically remain shut due to the maintenance or technical downtime? Is there any planned major shutdown ahead that we should factor into the volume guidance?
Except the normal shutdown, we don't foresee any major shutdown. But the normal shutdown is only for a day or two. That's all. Nothing else in a month. Not more than that.
Okay. And what is the current working capital cycle as of 9 months 2026 in the terms of receivable days, inventory days, and payable days? How has this trended over the past 2 years post deleveraging?
Receivable days is somewhere around 35 to 45 days. 30 to 45 days. And
Okay.
inventory is somewhere around 25 to 35 days.
Okay. And also you have highlighted green steel positioning. Have you received or applied for any recognized certifications such as Responsible Steel Environmental Product Declaration, ISO,
We have,
carbon reporting?
we have already certification of CBAM, carbon border adjustment mechanism, and which we are receiving on the past 2 years. Apart from this, we have also applied for the Green Pro, and we are also in the discussion for the green certification with the consultants. So as you told earlier also, we are planning to synchronize with our another rolling mill to the SMS, and post the synchronization and the conveyor belt, of course, we will apply for the green steel also. And this Green Pro certification from CII, I'm expected in this quarter or maybe the early next quarter.
Okay. Thank you. That's it.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Raj Shah from Shah Ventures. Please go ahead.
Yeah, hi, good afternoon. Could you give me also a sense of where steel melting utilization stands today in tonnage terms of quarter 3 and 9 months FY26? What specific operational constraints need to be addressed to reach 80%?
I'll give you in percentage terms. It is in the range of 60 to 65%. Capacity utilization is in the range of 60 to 65%. And we propose to increase it to 80 to 85%.
Okay. And what specific operational constraints need to be addressed to reach 80%? What would be your approach, sir?
As I told you that we are in the process of doing direct charging of hot billets for my TMT mill also. Abhi we have direct charging of hot billets for stainless steel mill. Right. So now we are in the process of completing the capex plan for direct charging of hot billets for TMT mill. So that process will be completed by in this quarter or early next quarter. Once that process gets complete, so my capacity utilization will be much higher. As on date, we have no issues as far as increasing the capacity.
Okay. And in terms of customer profile as well, I just want to know, like, are you seeing larger developers of EPC players increasingly, specifically for FE 550D or stainless rebars in tenders? Like, is there any pricing premium being realized for green or stainless positioning?
No, we also explained in our last meeting also that the stainless steel rebar is not grow in the way we anticipate. Of course, there is a future. The future rebar is of course stainless steel rebar, but the speed we anticipate, it is not developed. So it is for sure that in the near future, 550D is the very good brand, and we anticipate a very good demand for this product. At present also, there is the developers, all big developers are using 550D, and we have also developed and make sure that our product will be at par with all the primary producer of 550D grade. So yes, for the near future, we are looking for the 550 for the use of 550D grade. But yes, for the coastal belt, for the government projects, there is a great demand for the stainless steel rebar.
Okay, got it. And I just also want to know from a defense and strategic infrastructure perspective, are you engaging with any defense contractor like rail infrastructure players or public sector EPC firms where qualification standards are more stringent?
Not yet. We are first focusing to strengthen all our assets, and thereafter, of course, when we have after completion all our existing project, I mean with like the conveying system with our TMT mill and all. After that, of course, we will again focus on the other areas.
Okay. And with regards to borrowings as well, do you expect a short-term working capital limit to reduce as utilization stabilizes, or will higher volumes naturally requires a larger working capital base?
No. You know, on a last year turnover of 500 crores, we have a working capital of only 35 crores, which in our side company is much on a lower side. So as and when the volume will increase, we will definitely be looking for higher working capital, and we are trying to reduce the cost of debt also. We are making all efforts to reduce cost of debt by approaching new lenders.
Okay. And how many dealers we currently have, sir?
We have around 300 dealers spread all over northern India. We have Rathi Steel shops also. Besides that, for stainless steel, we do B2B business.
Okay.
Because selling of Rathi products is not a problem at all.
Okay.
It's not like that. I keep on manufacturing and I keep on keeping the inventory. No, it is not like that. Rathi is a very reputed brand in northern India, and we have never seen any problem in selling the products, in quality of the products. So selling part is not an issue at all for me.
Sir, I also want about any current credit period provided?
Credit provided to whom?
For like how long the current credit period is provided for dealers?
To whom? To the dealers. It depends from dealer to dealer and product to product. But it ranges from 30 to 60 days.
Okay. Got it, sir. Yes. That's it from my side, sir. Thank you so much for giving the insights for the business. Yes, that's it. That's all from my side. Thank you.
Thank you so much. Thank you.
Thank you. The next question is from the line of Meera Jain from Green Capital. Please go ahead. Meera, your line is unmuted. Please proceed.
Hello, am I audible?
Yes, you are.
Yeah.
Yes, sir. So few questions I have today. So on export side, do you see any direct opportunity with stainless products given the trade reset with EU and US? Even if not directly, do any of your clients have significant exposure to those markets that could indirectly benefit your volumes?
Directly, so we are not doing any exports to EU or US, but our dealers, distributors, I think they are definitely supplying, doing exports of our products.
Okay. And currently, which states contribute the largest share of revenue? Are you considering expansion into Western or Southern India, where stainless consumption may be?
No. You know, the steel. When we talk of TMT, logistically, it is very costly. If you go to Southern India or some other part, we are focusing on Northern India only for TMT bars. For steel wire rods also, our focus is mainly on Northern India.
Okay. And if you talk about yeah.
Like Rajasthan, Maharashtra, but that is only for the wire rods, not for the TNT.
Okay. And once rooftop solar is installed, and what percent of total power consumption could shift towards renewable sources? And what is the expected commission?
Rooftop, we have not yet, installed the plant, but we are again the discussion with the consultant because to check what best we could install, what best capacity we can install.
Sir, also,
And that I can.
are you looking for any inorganic growth? I mean, acquisition joint venture or something.
Okay.
Are you looking for any inorganic growth, like acquisition or joint venture in this?
We are definitely looking for some acquisition and all, but that will be subject to it will enhance our existing plant, which will be in line with our existing products.
So also, what is the guidance for FY27?
We have told this 7 times, we expect to grow at a CAGR growth of 20%.
Okay, so where we can see you in next 5 years?
Next 5 years, I think my turnover will definitely be double to what I am achieving today.
Okay. And sir, any updates, investors should look, we can expect in coming weeks or in next quarter? Any solid update, business, related to business and operations?
Whenever there will be any update, we will definitely keep posted it on the BSE website.
Yeah, fair enough, sir. Okay. Thank you. That's it from my side.
Right. Thank you.
Thank you. The next question is from the line of Yash Rathod from Unique Solutions. Please go ahead.
Hello, am I audible?
Yeah.
Good evening, sir. I had a few questions with me. The first question is there any scope to move further downstream, for example, into fabricated or semi-finished stainless products to capture the additional margin there?
Abhi to as of now, so we are focusing on consolidating our existing business. Once that get consolidated and my capacity utilization will be maximized, then we'll definitely think for that.
Okay. So the other question from my side was, from a cost structure standpoint, what proportion of the total cost is raw material versus power versus labor?
Material versus power? Versus labor. My raw material cost, you must have seen from the results, raw material cost is in the range of 75 to 80%.
Okay.
Right.
Okay. Our land holding is approximately 13 acres. Our land holding is approximately 13 acres. Can we expand the current facility within existing land, assuming we decide to do so?
Yeah. Land is adequate enough for me to do to going for downstream production.
Okay. And my last question was, if we look 3 to 5 years out, what do you believe will differentiate you the most, like in terms of scale, technology, green positioning, or distribution strength, or product specialization?
We are, you must appreciate the fact that we Rathis are always moving with the present trend. Right now, we are already manufacturing our most of the product with the scrap, which is presently known as the green steel and all. So we are already manufacturing green steel, and our future product like 550D or SS3 bar is also based on the green steel. We are also purchasing the power through the green power through the open access, and also we are making effort to install rooftop power plant. So of course we are already we have recently upgraded our plant so that our product will be the best in the market, best in the segment. So we are already with the latest technology in the trend.
Okay. Thank you, sir. That was it from my side.
Thank you. Anyone who wishes to ask a question may press star and one at this time. The next question is from the line of Raj Shah from Oaklane Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, are there any specific regions or customer categories where margins are structurally better compared to your current portfolio?
No. It is not like the case. The margins, there are different margins for different products, but customer-wise, there is no differentiation as such.
Okay, and sir, over the last few quarters, have you seen any changes in dealer behavior, like inventory, stocking trends, or credit appetite, which might signal demand acceleration or caution?
No. You must have, if you have seen our posting on the BSE website recently, we have achieved the highest ever turnover in January of 77 crores in a month. So, had that been the case, my turnover would not have been highest. Whether we are looking for better days ahead.
Okay. And sir, like what percentage of that revenue comes from repeat customers versus new client acquisition?
See, sir, if you the product, my product is, one product is TMT rebars, which is used for a builder. When a builder purchases TMT bar, of course, he needs the same product for his each product. But when it comes to the individual person, definitely the person will purchase only once or twice, because after that they have to, once his house is ready, they definitely do not need the bar. So, like my other product, accessory bars, SS wire rods, it is the B2B product, it has various applications like SS fasteners, SS wires. So the industries which are manufacturing, in the process of manufacturing, let's say SS fasteners, they need to purchase my wire rod on regular basis. So this is the nature of our product. So roughly you can say, yes, for stainless steel product, my repetitive client is more than 90-95%. And for TMT bars, it is more than 70% is my existing developers and suppliers. Of course, including my dealers and distributors.
Okay. Yeah, sir. That's it from my side. I'll join back the queue if I have any more questions.
Thank you, sir.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Anish Garg from Anish and Associates. Please go ahead.
Yeah, a very good morning. Good evening, sir. Am I audible?
Yes.
Okay, sir. So my question is, are we importing the raw material from any country, or the requirement is fulfilled locally only?
Presently we are not importing through any country, or if it is my requirement, it is fulfilled by domestic, or maybe the dealer who are providers the material, maybe he maybe import some part, but we are not directly importing right now.
So my follow-up question is, seeing the annual report of the last year, we have imported the raw material of 28 crores in the last year and 58 crores in the last year. So,
Yeah.
May I know the reason?
If you compare with the percentage, I mean the percentage of raw material imported versus my sales or my purchase, it would be hardly 7 to 10%. So whenever we found it suitable to import the material, we will do so. But there is a lot of formalities and time involved for the import. And by the time the material came to the Indian market, the scenario may change.
Presently, we are focusing mainly on domestic raw materials. But as and when the conditions will be conducive, we will definitely go in for imports.
So, from which country are we importing the raw material in the last years?
Last year, we imported from US, we imported from Europe, we imported from Dubai, we imported from Kuwait. It's only the scrap part which comes from US, Europe, or these countries. Otherwise, all other raw materials are local.
Okay. Okay, sir. Thank you. That's from my side.
Yes.
Thank you. Participants, if you wish to ask a question, please press star and 1 at this time. As there are no questions from the participants, I now hand the conference over to Mr. Parth Acharya for closing comments. Over to you, sir.
Thank you everyone for joining the conference call of Rathi Steel and Power Limited. If you have any further queries, you can write us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you so
Thank
much
you.
for your continued support.
Thank you.
Thank you very much. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you all for joining us today, and you may now disconnect your lines.
Thank you.